IMF cited stimulus measures and lower than expected tariffs on China's exports as key drivers of this latest revision. Which of those factors matters more, domestic stimulus or external trade conditions?
Well, I'm sure the IMF and I would love to say this domestic stimulus is going to carry the day, but unfortunately, they've tried that effort so many times. So for me, it's the export that's getting back into gear is going to be the most helpful for China. China really is a success story overdone in the sense that it's producing so much so efficiently, and prices, as you just said, on the factory level are dropping because there's just so much supply. They can't sell all this stuff, and the rest of the world is really the hope for China to be able to ship out to Latin America, emerging markets, Africa. Europe is already showing some signs of resistance. They're putting up tariffs on electric vehicles of about 40-some-odd%. So China really faces a huge problem of successful production, and in some ways that's a very good problem to have.
You know, William, I thought it was interesting too to hear about what the IMF had to say, that China right now is, quote, ready to reach a new stage of development, to go from manufacturing goods into service oriented. Talk about that. How important is that? What will that mean to China's economy?
That would be a major step forward of moving China from sort of the middle class layer of countries into the big leagues. And we see it happening day by day as we have more talk about the AI development and new technology developments in China. Much of that AI development is not only going to robotics and making manufacturing even more successful, but it's going into the service sector, which is so badly needed.
Right.
The service sector is the lowest productivity sector all over the world, but China's development in AI and in technology in general is helping to make workers in the service sector much more productive.
And one thing we can't lose.
Oh, by the way, which means higher wages too.
That's always good. One thing we can't lose sight of is China's record export numbers. And this also in the face of these headwinds that the IMF talks about as well. Do you think that this is China just showing what it does best? If a wall basically comes up, they find a way around it. When the Trump's punishing tariffs came out, they really improved their exports to ASEAN nations, the global south, and really went back to old friends and said, let's find a way to continue to do business.
Well, Sean, I'm sure you've heard me say before that the whole point of the Trump tariffs is really an investment project to try to get more investors to move capital into the United States. But China felt the effects of those tariffs by having its market in the United States threatened. And what China did, as you just said, is what it does best, which is to find other markets. And right now it is going to Latin America, it is going to Asia and saying, we've got a lot of good stuff to sell you. Unfortunately, a lot of these countries are also developing a lot of the same products. And so China's going to have to compete with domestic producers. And a lot of countries are wanting to protect their own workers. So China will face some headwinds doing that. But certainly you're absolutely right. China has been absolutely the top of the class in terms of being able to find new markets, be able to penetrate those new markets and sell a lot of stuff there.
You know, they've really dodged a direct hit from all of these tariffs, but you talked about it. Europe throwing up more in the face of EVs, and Europe really wants to invest in those, and of course what's going on in the U.S. So in the face of these potential trade tensions, how is China going to continue to move forward?
I think China's going to have to learn the lessons of every country that's been successful industrially, which is to say, you need to produce closer to your customer. Instead of producing in China and exporting out of the country, I think China's going to learn that it pays a lot, as Japan learned, to build your factories near your customers. And I think that China's already done that by putting a lot of the factories for electric vehicles into the Belt and Road countries, especially Eastern Europe. And I think that will be the next phase of China's development. So I think when the IMF refers to the China entering a new stage of development, it's not just referring to consumption. It's also referring to exporting its investments abroad and exporting its technology abroad, exporting its factories abroad.